Good morning, gang. Happy Sunday morning. Okay, today is a very important day that's not being reported by the mainstream media at all. Okay. Today is the last day of the 50-year Petrodollar contract that was signed by Saudi Arabia and the United States back on June 6th, 1974. Okay. The contract expires today. Okay. You could say at midnight, but pick where. Washington, Riyadh, it doesn't matter. Okay. It expires today. This could feasibly throw the U.S. economy into turmoil. Now, will it? I can't say. I don't know. But the issue that comes about is liquidity and the big I word, inflation. Okay. To give you an idea what the petrodollar contract is, 50 years ago, Saudi Arabia signed it, was that all oil purchases around the world would be settled in U.S. dollars. Okay. Which basically means that every country in the world had to keep a reserve of U.S. dollars, which allowed the liquidity. Dollars were good everywhere. You think about this. You go on vacation overseas somewhere, and you can pay in yen, or they'll take dollars. You can pay in euro, or they'll take dollars. You can go to Mexico, pay in pesos, or they'll take dollars. But try going into a store in the United States and paying in yen, or euro, or pesos. You can't, okay? But the rest of the country would accept it because it was a global currency. Now, when countries were required to keep it, because if they wanted to buy oil primarily from Saudi Arabia, and then you get the rest of OPEC just following along, that was important. So they kept U.S. dollars in reserve. And I mean, we're not talking about small amounts, okay? I'll give you this. As of right now, most recent figures I can find, okay, which are somewhere between January and March of this year, China had $797 billion in U.S. currency in their reserves. Russia, even with their war, still has $300 billion in U.S. dollars in their reserves. India has 646 million. This is where you start watching this. 3 years ago, it was 642 billion. Okay. So you're talking a 90% drop in what India's kept in the way of dollar currency. Now, how does that all affect us? Well, if there is no, or less, let's not say no, liquidity in the market for dollar, it's not accepted everywhere. That is going to drive up inflation because you're going to have a flood of dollars that these countries no longer need to keep coming back into the United States, repatriated here, which of course is going to make the dollar worth less and less and less and less. So what's going to replace the petrodollar? Well, you have the BRICS currency. They're trying to put that together. That may eventually be it. Saudi Arabia's already signed a contract to settle oil transactions in yuan. So what does this do? Well, this could significantly change the world economy. It could make China the dominant economic superpower and relegate the United States to B-level economy, which we're not used to. None of us, okay? You think about the growth in the United States. Well, the United States wound up the superpower of the world for pretty much two reasons. One was because of all of the payback that we got for World War II. Okay, while most of Europe was destroyed, we had loaned countless billions of dollars to England, Germany, France, Russia, whoever it was, to rebuild after World War II. And so instead of them spending their money on building up militaries, building an economy, they were sending it all to us. There was the first thing. The second thing was the petrodollar, which of course made the liquidity all over the place. And again, we go back to Bretton Woods and everything like this. This is what we're talking about, 1974. But now, feasibly, we are going to have neither of those. Ain't no countries in the world paying the United States back for anything. We've been borrowing money like crazy. We're paying everybody else back. So that's a downside. Now you lose the liquidity and the global power of being the world reserve currency. That's going to drastically affect our economy. You could see, I'm not making any predictions here, a huge spike in inflation with all those dollars being repatriated. Okay. You could see a great demise in the American workforce because now the Chinese economy is going to grow astronomically because everybody's got to hold yuan instead of dollars. So they're going to be flush with cash, you know, different than they are now. But more and more jobs could wind up going to China. China will be the leader of the world. What China says will be the way that, I don't know, the Ukraine war goes, the Israel-Hamas war goes, pick something. You know, China is going to be the important one because other countries around the world are going to go, we got to stay close to China because they're the ones with the world reserve currency. Except you need to remember one thing. China's a communist country. So imagine going back 30 years, okay? We could all suddenly, the entire world, be living in conditions like the former Eastern Bloc of the Soviet Union was. The Polands, the Romanias, the Hungaries, the Czechoslovakias, etc., etc., etc. Under communist rule, economically, okay, without any recourse. That's the path this is on. That's how bad this is screwed up. Now, you look at what the U.S. is betting on, and they're still hoping for some miracle digital currency that's going to make a difference with, okay? And that Saudi Arabia is going to be, all of OPEC, is going to be more concerned with getting paid in Fed coin, whatever you want to call it, okay, than getting paid in yuan. Is it possible? Sure, okay. Ultimately, the best bet, because we already know that the BRICS nations want their joint currency backed by gold and silver. Ultimately, the best move for all of us is to continue adding to our gold and silver, because just like the dollar getting more and more worthless, I mean, the dollar's worth less than 1 penny of what it was when the Fed was created in 1913. Okay. The yuan is no different, all right? Backed by the full faith and credit of any government is a folly, but backed by a hard asset is different. Could they go and try to back it by Bitcoin? That's possible, But that would be really interesting when you had a regulated currency backed by a deregulated currency. That would make for interesting analysis as an economist, okay? Just simply put there. But right now, we don't know what's going to... The market could go absolutely goofy tomorrow. We're going to see what happens, but we won't know anything even about futures until 6 o'clock Eastern tonight, so we'll see what happens there. But as per normal, it behooves people to continue stocking gold and silver. We've had a nice pullback here. If you can get anything under silver, anywhere under 29, that is a great buying signal. If it dipped below 28, that's screaming buy. Okay, I don't know if you'll see it drop to 28. My guess is with BRICS expiring, you're probably going to see a bounce in the silver market when it opens up. So if you're taking a look at buying something this morning, this afternoon, sometime before 6 o'clock, would probably be a good idea. Anything you can accumulate is just safe money. And sure, you could say, well, gee, you know, silver was up at 33 last week and now it's down at 29. Look how it's dropped. Okay, yeah, unless you're planning on day trading gold and silver, who cares? Silver was 23 about 6 months ago. So, yeah, you're still doing okay. Guys, position yourself to be safe with this, because we're getting closer and closer and closer to the point of taking the wheelbarrow full of dollars to go buy a loaf of bread. If the petrodollar is dead, we're now a second-rate country economically. And none of us, most of us at least, have never lived through that, where other countries are more economically powerful than the U.S. We just arrived. Pinball out.